today we have a special guest. We have Dilen from MacroIQ and also the Crypto Circle. So today we're going to dive into how macro not only sort of the outlook on traditional finance and also crypto as well, and how these bridge together. So it's good to have you here today, Dilen.
Pleasure to be with you, Dee, as always. And Graham, pleasure to meet you as well for the first time.
Absolutely. Great to see you, Dilen.
Glad to be here. Glad to be here.
Wicked. So look, there's a lot going on at the moment in traditional markets and in cryptocurrency as well. We're looking at potential rate hikes. Well, we've already seen a rate hike in the UK, and last year, pretty much a lot of countries around the world was also sort of hiking rates. Now we're looking at the US talking about quite a few rate hikes. How do you think that's going to affect markets? We've already seen a bit of pressure in the markets, but how do you think this is going to transpire over the next 12 months?
Yeah, I mean, it's not nothing out of the ordinary, to be honest with you. Whenever we do enter a kind of tightening cycle, risk assets usually do kind of go risk off. It's nothing out of the ordinary. But if we kind of take it back to kind of, let's say, September 2020, I remember the Fed kind of were quite clear on their mandate in saying that they were kind of focusing on growth. They were focusing on it, growing the economy and making sure that was stable after the kind of pandemic. Now, we're in a position now where growth is off the table and inflation is the main kind of thing they're looking at. Like, inflation is the key thing for them. It's the key kind of variable, and it's the key thing that they need to try and bring down. So over these next kind of 12 months, how I see kind of the interest rate hikes going, at the moment, looking at the kind of yield curves and kind of how everything's playing out, where the yield curve's sitting right now, the last time we were in a position like this where the Fed was 1 month out from making a rate hike was in 1997, and that during that time they only managed to do one rate hike and they ended up pivoting on their policy approach. So I think they will manage to get around about 4 to 5 rate hikes, but I don't see them getting the Fed funds rate back to at least around 2%, to be honest with you. As usual, whenever the Fed does do a tightening cycle, whenever they do try to raise interest rates, they always end up breaking something. And when they break something, they have to pivot back on their approach. And you know what that means? That always means more QE and lower interest rates.
I agree. And it's quite funny. So the Fed, when the sort of an inflation narrative started to come around, they kind of said it was transitory. Then they sort of retired the transitory inflation. And then now they're saying that, we're still going to see growth. Which is kind of, it's hard to believe all these. Sorry?
It's laughable. It's laughable.
Yeah. So, so there's a lot going on at the moment. Now, not only the rate hikes can be a cause for concern in markets at the moment. And like I said, we've already kind of seen it. Now, you could argue that is it already kind of priced in to a certain extent? But then also we're seeing the tensions now over in sort of Russia and Ukraine. How do you also affect? It's like a knock-on effect at the moment. It's like one thing after another. So, how do you feel that could potentially affect both the stock market and also the crypto market as well?
Yeah, I mean, you've been seeing it over the last couple of days, haven't you? Kind of going back and forth, risk on, risk off, where, troops are moving in, troops are moving out. You don't know what's really happening. And I think, to be honest with you, I've been watching like kind of Bloomberg, watching kind of investors go about it, talk about the narratives. And to be honest, I don't think investors are quite sure how to handle this because we've not really been in a scenario where we've been faced with a war for a long time. So investors don't really know how to position themselves going into this whole scenario. Obviously, it's a risk-off event. Clearly is a risk-off event. But to be honest with you, kind of geopolitical things, it isn't really my speciality. But yeah, I would assume it would be a pretty huge risk-off event. If that was to happen, you'd see a huge flight to safety and things like gold and things like the dollar, the yen, the Swiss, those kind of currencies, those kind of assets. And yeah, things like Bitcoin, things like the equity market, they would have a pretty serious drawdown, I'd imagine.
Speaking as someone who's relatively new to this crypto world, part of how it was sold to me was that these were uncorrelated to traditional financial markets. Yeah. And what's clearly happened in the last few months is that theory has been blown out of the water. And then it feels like to me, it's just another risk asset. And, Bitcoin hardly seems any different to Alphabet or Amazon or Tesla, I mean, so how have you kind of found that correlation as it's developed over the last couple of years, and has it been a bit of a surprise to you?
Yeah, I mean, that correlation just tends to ebb and flow in terms of the way it works. So whenever it's uncorrelated, you'll hear all the Bitcoin kind of bulls screaming, oh, it's an uncorrelated asset, it's an uncorrelated asset, it's an inflation hedge. And to be honest, you do get moments when it is like that. But I've always kind of preached to people, look, it's not a risk. It's not a risk on risk off asset as of yet. It's not an inflation hedge as of yet. We're still very early in this kind of space of Bitcoin as an asset, and we just need to wait. Like it's very much still correlated with the kind of equity market, with these kind of riskier assets, and until kind of, well, one thing that I always kind of found funny was everyone was kind of waiting for these institutions to come in with all this money, these trillions and billions of dollars. But the fact of the matter is, if these institutions are coming into this space, they're going to be managing Bitcoin in a portfolio with other risk-on assets as well. So you need to kind of see that kind of clarity in terms of investors are managing Bitcoin, which they see as a risk-on asset, with things like Tesla, with things like Amazon, with all these other riskier assets in the portfolio. So it's going to act like that for the time being in the short term, until we see some sort of like maybe catalyst which does kind of separate the two.
Yeah.
Okay, it's interesting. Yeah, because it seems like it's obviously very early. It's a very small market compared to some of the, you talk about things like the forex market, which is massive. And I guess one of the big trends we've seen in the traditional financial markets over the last couple of years is manipulation by the Fed and central banks, buying left, right, and center with money they create at the click of a mouse.
This meeting is being recorded.
That's a cut for Jamie, because I don't know what happened then. Yeah.
Okay. One of the things we've seen is a lot of manipulation by the central banks and the Federal Reserve. And one of the things I wonder about for the poor retail investor is, how on earth are we supposed to understand the fair price of anything when they're doing that level of manipulation? And perhaps the one thing we can say about Bitcoin is it's one of the very few things they can't manipulate.
Yeah, I guess you're right in that sense. I guess every market's manipulated in a sense, not by the central banks, but like kind of institutions and things like that. But it is the kind of unique. It does have that kind of unique set that it can't be manipulated by central banks. Well, we say that now. There could be 10 years down the line when central banks are holding it on their balance sheet. We don't know that yet. We've already got countries holding it, so yeah, why not? There could be 5 to 10 years down the line, you'll have the central bank of El Salvador, central bank of, I don't know, Zimbabwe or whatever, kind of holding some Bitcoin on their balance sheet.
So what I find crazy is, the sort of shift in opinion with cryptocurrencies. If you look back as just 2017, JP Morgan saying it was a scam, and now a few days ago they've opened a lounge in the metaverse, right? It's crazy how the opinion changes, right? Now, we're already seeing the sort of institutional adoption that everyone keeps talking about, and all this capital's come to the space. It's already sort of kind of happened, and things have changed massively. Now, when you look from sort of looking at the cycles in crypto, you see that each time we kind of lengthen slightly. It doesn't quite run up to that sort of top logarithmic regression band, just fell short last time. Now, if you look at previous cycles to this cycle, considering we've had sort of the adoption, like DeFi, this wasn't around in the last cycle. It's absolutely crazy, the entire DeFi ecosystem and everything that's going on. We didn't have any institutions really talking about Bitcoin. We didn't have any nation states adopting Bitcoin. We didn't have anything really that's going on at the moment within cryptocurrency. Now, you could kind of say that as of right now, the whole cycle has completely underperformed, and this whole cycle that we're in now is underperformed because we haven't done anything compared to what we've done in previous cycles. However, we've had more adoption this cycle than we've ever had. So what do you think the difference is as of right now? Do you feel that's partly to do with manipulation, or what do you think's holding price action back at the moment?
Yeah, I think it's kind of a number of things, to be honest with you. I think one is kind of the retail speculation and euphoria that's kind of left the market, and that left last year in May. I think another thing is that we really are missing like some sort of a catalyst in the market right now. I remember last year and kind of at the back end of 2020, we had PayPal coming into the market, which was huge, which kind of really sent the price kind of soaring in the back end of 2020. And then 2021, we had Tesla, we had kind of El Salvador, we kind of so many different kind of catalysts to really move the market. I think we're really missing that at the moment. And of course, the whole kind of macro environment is kind of adding to that kind of uncertainty really around the asset class and riskier assets as well. But I think kind of the retail aspect of this is kind of really a big thing, because usually, especially if you look on chain, I've been kind of looking at this quite a lot recently. If you look at kind of factors like number of active addresses and number of new entities on the Bitcoin network, usually when the price heads to a new all-time high, we see spikes in those two metrics. Now, when we spiked to $69,000, the new all-time high, we didn't see that. New entities and active addresses were completely flat. Which was quite interesting actually. And if you actually go and read what some of these actual on-chain specialists talk about, they've actually said that we've been in a bear market since May 2021, and that's quite interesting, because so that means we made a new all-time high in technically a bear market, which is unprecedented, really unheard of. So it's interesting. And for me, like I said, yeah, the three things which are really sticking out to me is retail participation isn't there. Catalyst isn't there at the moment, and the kind of macro environment is really uncertain. So until one of those three factors change, and the main one being for me the macro environment changes, I don't think Bitcoin is really going anywhere this year, to be honest with you. There's going to be months where it does perform well, like yesterday it had a pretty good day. Ethereum was up like 8 to 10% or something like that. There's going to be months where it does perform well, because it's just the volatility of the asset class. But I think we just need to keep our feet on the ground, because there are bigger implications at the moment. There are bigger things happening around the world at the moment.
Do you also, when you look at it as well, so, we looked at, like you mentioned then last year in the catalyst, we had PayPal come out first, then we had Tesla bought Bitcoin, put it on the balance sheet. And then when we kind of, that sort of euphoria sort of went, the El Salvador news didn't really move the market. And then, what was it, like a week ago, Apple said that they're going to integrate it with Apple Pay. So it kind of, if you want a catalyst, really, the Apple Pay news should have, been super, super bullish. Like when Tesla said that they bought it at $1.5 billion of Bitcoin, it shot up 30% in a day. But
Yeah.
we're not seeing that type of thing happen now. So could you argue then potentially that we're now finding Bitcoin's fair value as of right now in that probably $35,000 to $45,000 range? Is that now Bitcoin's actual fair value? A traditional investor could argue that that's where we're at now, and we've swung up and down, and now we've kind of find the fair value. What's your thoughts on that?
Yeah, I 100% agree with you there. I think, well, just going back to your first point, actually, you know how people say whenever there's good news coming out and the price isn't moving, then there's typically a bearish sign. Well, like I said, whenever there's good news coming out and the price isn't moving, that should tell you where we are in the market. We are nowhere near bullish. Anyone who's screaming that we're bullish right now, or is really optimistic on the price heading back to 60K over the next couple of days, just like I said, keep feet on the ground. But yeah, in terms of like Bitcoin reaching its kind of fair value, again, there's a couple of like on-chain kind of metrics out there which do measure kind of Bitcoin. One being the Mayer multiple, which is a great kind of macro overview of kind of Bitcoin's fair value or fair estimated value. And anytime we've been at like a kind of the multiple of 0.8, I believe it is, you can go kind of research this. Bitcoin has been seriously underpriced. So the last time we were at 0.8 was back when Bitcoin was at $3,000 at the bottom of the kind of 2018 bear market, March 2020. These are all like serious inflection points in Bitcoin's kind of history, where buying Bitcoin then would have been the greatest buying opportunity ever. So yeah, Bitcoin is undervalued. I believe so, 100%. And I believe, yeah, we are flirting around that kind of fair value at the moment. I wouldn't be surprised if it does go down to $20,000, like don't be surprised if that does happen. But yeah, anywhere between like $20,000 and $40,000, I think is a great buying opportunity over the kind of next 5 to 10 years.
So what does that mean? Your view is, obviously you talked about the macro, you talked about a catalyst and more retail involvement. If we started seeing some of those things, and maybe it's late this year into next year, I mean, what's your serious kind of considered view as to where Bitcoin's price and value could go in the future?
Yeah, I think me and Dee jumped on a podcast actually early last year, and Bitcoin was like flying in value. It was like probably about $40,000-$50,000, and we were saying all the talk of like $100,000, and we were like, it's going to be $100,000 by summer, never mind end of 2021. Yeah, I think by the end of the decade we could definitely be at about 6 figures. I don't like putting numbers on things, especially anymore anyway. But I think just kind of looking towards the end of this year, we've talked about like kind of interest rate hikes and things like that, but I think there's one kind of risk factor out there lingering, which not a lot of economists are really talking about at the moment. they are kind of talking about it a little bit, but it's kind of really at the back of their mind. And what they really are saying at the moment is growth is still strong. Whereas, like I said, like Dee was saying earlier on, when you raise interest rates, you're essentially slowing an economy. You're slowing demand down in the economy. The problem we've got right now is demand is already pretty slow in the economy. You just have to take a look at the US consumer to look at that. So US consumer spending right now contributes to about 69% of US GDP. And if we dig a little bit deeper into that and look at consumers' kind of personal savings rates, the personal saving rate of the consumer has dipped below the COVID trend now and back to levels last seen in around about 2011. Now, if we dig a little bit deeper and look at credit card debt, they've now racked up a record amount of credit card debt at $19.8 billion. So you put that all together and you say, okay, the consumers depleted all their savings from COVID, from all the stimulus checks that were handed out, and now they're resorted to buying goods on credit. Okay, a little bit of that's to do with inflation, but the growth story, if growth does end up slowing down, right now the market's scared and the market's worried because of this whole the Fed hawkishness narrative. If we do go into this growth slowdown, you could probably see another drawdown in the equity market of 20-30%. What's that going to do to the crypto market? 40-50% drawdown maybe. Where does that bring Bitcoin? Maybe to around $20,000. So I don't know, $20,000 to $40,000, like I was just saying before, seems like a kind of fair value for Bitcoin during this year. Next year could be a completely different story, and we could see the kind of resumption of that kind of bullish cycle, or bullish. I hate using the word cycle, I really do. But we could see the resumption of this kind of bullish trend in Bitcoin again. But yeah, this year I'm going to remain a little bit more cautious on the kind of crypto market. There will be opportunities there. Always is opportunities in financial markets if you do look for them. But I'm going to keep my feet on the ground this year.
Okay, and I think just, we've talked a lot about Bitcoin, and it's obviously the blue chip of the sector, but what about the rest of the sector? Decentralized finance is radically revolutionizing the way money moves around the world. So do you see scope for some significant growth in some of the smaller cryptos that are engaged in some of these really exciting projects?
Yeah, I think the difference between 2017, 2018, the last time we had like a bear market in crypto, and now is we're seeing like more significant amounts of capital flooding into the space, whether it be from institutions, corporates, whatever it is. And they are finding value in these kind of alternative tokens and these kind of alternative spaces within crypto. So yeah, definitely there is if Bitcoin does kind of trend sideways between this kind of fair value that we've been talking about between $20,000 and $40,000, then yeah, you could definitely see some kind of momentum in these kind of other spaces like DeFi. I think DeFi has really struggled in terms of, especially from like a price perspective anyway, ever since really last year. Do you think it was around about January 2021, the last time DeFi really did have like a really bull phase, didn't it? I'm sure.
Yeah, well, it was the whole run up in 2021 up to sort of May. I think that's when
everything kind of fizzled out.
It was incredible. It's kind of when people started to really believe in DeFi, because you've got to think 2020 after the halving in May, there was a lot of talk around it. Then you had companies like Yearn Finance that I think they jumped on Uniswap at like $6, and then they went up to $90,000 a token. So when you start to think of the exponential growth of DeFi in a very short space of time, I think people started to realize the different opportunities at the time in crypto and in DeFi predominantly. One of the things that I wanted to ask, and not to deviate too much off DeFi because I do want to come back to it, but just to sort of finish up on Bitcoin before we move on, is where do you feel the value is in Bitcoin? Now, we've shared the whole narrative around, only 21 million Bitcoin, et cetera. But do you feel, as of right now, Bitcoin should be looked at as a store of value, or be looked at the value of Bitcoin comes from the network? Which one do you believe we should be looking at for Bitcoin? At
the moment, you'd have to say value of the network, because it isn't the store of value right now, is it? In terms of, in a long-term trend, yes, it is the store of value, but at the moment, short-term, medium-term, it's not really a store of value. Another thing I would add to that is, especially with what's kind of going on right now with Canada, it's freedom money, man. Like really, like what's going on in Canada right now is I was literally last night, I was up reading about it for ages, watching loads of videos. It's absolutely absurd, man. The way a government can just lock down and freeze your assets like that. I mean, come on, man. Like Bitcoin is freedom. It's freedom.
And
Totally. I mean, don't get me started on that one.
Yeah.
Sorry, Dee.
I want to get you started, Graham. Come on, I want to hear it.
We're going to see, more of this, with central bank digital currencies. We're going to see this happen a lot easier than they're doing now in Canada, right? And something that me and Graham have discussed ourselves with our group is, you see that we're seeing capital controls happen back in Greece. And then in 2014, the G20 basically announced that they could start to use capital controls as a tool if they need to. So, it's already in place. People think that they're totally safe with their money in the bank, but, they don't own their money. So I think that looking at that sort of the freedom of movement with your money and becoming your own bank, I think Bitcoin is definitely something that people can look at. And we're seeing like football players and stuff. My athletes want to get paid in Bitcoin, and we're seeing a lot of the talk around it and a lot of hype in the NFT space. But one of the things that made me ask you that question was, I'm not sure if you've shared the podcast with Jack Mallers talking about his presentation to the IMF recently, but Jack Mallers was invited into the IMF to discuss Bitcoin as a network, right? And he kind of described the payment system and using the Lightning Network as as a settlement system for payments, global settlement, sorry. And he actually reads out an email that one of the directors of the IMF emailed him afterwards, and he was so positive. It was unreal, the stuff that that they sort of kind of said, look, as a payment network is incredible, pretty much, right, as a pristine payment network. And Jack Mallers obviously gives credit to Bitcoin, and the Lightning Network as part of it is allowing people to do this, because the whole story around Bitcoin being slow and Bitcoin this, and they try and find all the things to prod Bitcoin of all the things that it isn't, right, and how it's an old technology and all the other stuff. But as with the Lightning Network and what Jack Mallers has done with Strike, now you're seeing, the Bitcoin wallet in El Salvador. You've got 6.8 million people in El Salvador, and 4 million of them are already using the Bitcoin wallet, Shiva or whatever they're calling it down there. So yeah, that's why I kind of asked you about it as a network. But then also another thing that we've covered recently is how people look at Bitcoin and take a short-term mindset and approach to Bitcoin when it was never built to be a short-term asset. However, people, for some reason, look at it that way. We're looking at the last block being mined in 2140, right? So at what point do you think it becomes a store of value?
I feel like there has to be like a serious, like I said, I keep going back to this word. I feel like there has to be a serious catalyst in the world for Bitcoin to be then looked at as, I mean, I think it is in a certain, well, by Bitcoiners anyway, we believe it's a store of value. But for like the rest of the world, for like central banks, for like these big institutions, for them to really see it and hold it as a store of value like gold, I feel like there has to be like another catalyst. You would have thought COVID would have been it, and it was to a certain extent with the kind of printing of money and the kind of low interest rate environment. It was to a certain extent over gold, because gold completely underperformed as an asset during that time in the environment that you would expect gold to perform in. It did nothing. So in that environment it did do well. But yeah, when do I see Bitcoin as a store of value? Probably I would say during this decade. If you look at kind of world events over time, kind of like each generation has their like big event, right? Our generation's event was COVID. Previous generation before that was 2008. The one before that was the kind of tech bubble in 2000. I feel like there's another one to come during this decade, maybe. And that could be the catalyst, I think, for Bitcoin to be seen as a real store of value.
I think you've already named the catalyst, to be honest, Dylan. I think the catalyst is freedom and liberty, because, if you look back, I was just thinking about this, Dee and I were on a broadcast last night. It took a bloody revolution in Russia to introduce authoritarian communism. It took a bloody revolution in China to introduce authoritarian communism. And yet in the last 2 years, authoritarian communism has infiltrated previously, democratic Western countries without a shot being fired. And it's happened, I think, because people have been so kind of compliant and supine and passive, and no one's kind of, until finally, thank God for Canadian truck drivers, somebody's actually pushed back about this. And as you say, what's happening out there is outrageous. I mean, I met a guy last week from Nova Scotia who said that when the government in Nova Scotia heard that the truckers were going to come through, they passed a law in the High Court overnight banning people from going out on the street to wave at the truckers driving past. And then there was a $10,000 fine that Justin Trudeau introduced. So when you start looking at what these fascists are doing, supposedly to keep us all safe, but actually taking away our freedom, to me, the big catalyst for Bitcoin and cryptos is personal liberty and freedom, because it is under threat more than at any time since the Second World War, in my opinion.
Yeah, I think you absolutely nailed that. I think you absolutely nailed that. I would like to ask you actually, Dee, what's your thoughts at the moment on, because I remember you just talked about Russia and talking about that kind of authoritarian governments as well. Like we obviously have seen China kind of really clamping down on it. Russia is obviously another kind of real authoritarian government. What's your opinion on them really turning pro Bitcoin now?
Yeah, it's this sort of opinion change. It's just
Crazy, isn't it?
Yeah, I think that when you look at, I think it's the lack of education at a high level. I think that we're so used to just doing things the way we've always done them, and it's sort of, things evolve at the rate that the people at the highest level decide they evolve at. And I think because this one's out of their control, they're not in control of how quick cryptocurrency or blockchain is evolving. I think it was hard for people to swallow the pill, and I think that they've kind of had no choice. And I think that's why we've seen a very slow rollout in CBDCs. They all had these ambitions of rolling them out well over a year ago, and we're here in February 2022, and we still don't see a Fed coin. We still don't see the what's called Brit coin, or whatever they was going to call it in the UK. The digital euro still up in the air. So they had these very high ambitions of rolling these out very quickly, and I think that they've underestimated the technology and how fast people have adopted this. Even the tax laws. How are they going to keep up with everything? Just when they thought they had their head around Bitcoin and Ethereum, then by the time they got their head around now, or even if they have, you start to see NFTs go crazy, then decentralized organizations, autonomous organizations, the DAOs, and it just continuously moves on so quick. If we can barely keep up with it, I don't know how they're going to keep up with it. So yeah, I think the opinion changes happen very fast, just purely based on the fact they had no choice but to kind of accept things because something else keeps moving on. So it's definitely hard for them to get their head around it in regards to that type of stuff. And that kind of brings me on to my question for you, is your MacroIQ research platform that, is going to be launched by the time this gets released. You mentioned how you believe retail investors should have, access to very similar knowledge to, what institutional investors do get access to, or even just think a little bit differently. And I think this is more important now than has ever been in history. I always believe people should understand macroeconomics, even a slight bit, regardless of what asset you invest in. But I do believe now, with everything and the macro shifts, is more important than ever. So what is it that you're personally going to be focused on, and what made it, what sort of light bulb went off in your head to be like, look, people need to start to have access to this sort of information?
Yeah, let me just kind of like set the stage almost for this, because over the last 2 years, what we've really seen is like apps like Twitter, like Reddit, investing apps like Coinbase, Robinhood, eToro. What all these apps have really done is lowered the barrier to entry for investors in a way like we've never seen before. So obviously we've had COVID, interest rates, endless supply of money, and with the kind of lowering of barrier to entry with these apps, investors have just kind of flocked to the stock market, to the crypto market, and started speculating. And of course, COVID didn't help because a lot of people got laid off their jobs and people needed to make money and flip money in a way. But what MacroIQ is all about, really, like you said, it is about bringing that institutional quality research to the retail investor. Now, the problem that I see right now in the market, in the landscape with these kind of macro services is a lot of them are tailored towards either institutions or people who know what they're talking about in the space. Retail investors have always had the mindset of fundamentals mean nothing. It's all about the technicals. I come from like a retail background. You know, I started trading Forex first and all that kind of stuff. And that was always the mindset. Fundamentals don't matter. Pay attention to the technicals. The only one fundamental event that they used to pay attention to was NFP on a Friday, first of the month. You know, that's the only kind of real news event that retail traders used to pay attention to. And now we're coming into this environment where there's no more easy money up for grabs and you're going to need a brain to invest. You know, and there's so many like different obstacles to kind of trying to swerve during this year. How's central bank policy going to kind of evolve over the course of this year? Where's economic growth going to go? Where's inflation going to go? There's so many different dynamics to kind of navigate now for retail investors. And for me, I just want to make sure people don't lose money this year, right? And to be honest with you, a lot of people, a lot of these platforms say, okay, I'm going to make you hundreds of dollars, I'm going to make you thousands of dollars. I think in environments like this, people lose sight of preserving your capital over growing it. You know, there's always going to be opportunities to grow your capital, but in environments like this, don't forget to preserve your capital. It's just as important as growing it.
I agree. And I think it brings me on to this point. So I'm on tradingeconomics.com now. And then, you know, for somebody looking at this, you see Austria 10-year bond yield hits 3-year high. Denmark 10-year bond yield hits 3-year high. Finland, same thing. UK, same thing. South Africa, same thing. It's literally non-stop, the same thing over and over again. Now, the average investor would look at that and kind of be like, well, what does that mean? So are you going to kind of, is this going to be something where you break down what one indicator generally means off historical data and then what it could mean? Is that kind of what you're going to be doing for people to really understand? Because, you know, when people look at unless people watch CNBC every single day and they listen to the experts on there, it's kind of hard for people to know which direction to go in and know how to potentially rebalance their portfolio.
Yeah, it's exactly going to be that. So I'm going to be using a platform called Substack to release weekly content, monthly content. And in the weekly content, it's going to be like breaking down things like that. What are bond yields? What's risk on? What's risk off? These like small little things, just giving people the foundation, the building blocks to really understand what's going on. And then the monthly report, which I put out at the end, is going to be kind of putting it kind of like entwining everything together and giving you my outlook for what's happened during that month and what I believe is going to happen the next month and kind of going forward. So the weekly content is going to kind of keep you fed, give you the breadcrumbs, and then the kind of monthly content is going to give you the full kind of meal, the full dinner, as so to speak.
I love that.
One interesting thing I'd like to pick your brains on, if I can, Dylan, and that is that there's always been a slight kind of fear in the back of everyone's minds about how they're going to end up regulating the crypto sector.
Yeah.
And there's been all sorts of, you know, talk from the various, in fact, almost competing regulators in America that are each trying to say, look, this is my thing. No, it's my thing. You know, I'm going to regulate this. And that's been a bit of a dampener, I think, on investor sentiment. So what do you see as the way in which, is there going to be like a peaceful coexistence of private cryptocurrencies and government-run ones, or is there going to be a kind of an all-out battle and some real fights to be had with regulators trying to stamp out all this independent thinking and independent money?
Yeah, you've definitely got regulators trying to. You're definitely right there. I think you got regulators really trying to fight over to regulate. So you got the SEC, you've got this alphabet boys, the alphabet boys here and there. You know, I like to call them the alphabet boys. Yeah, like I think you are right in terms of it has dampened investor sentiment, but it's not something which investors are too worried about at the moment, I don't think. And Gary Gensler, just I don't know what his agenda is at the moment and how he sees and how he's going to regulate this asset class personally. I don't think he's really made it too clear, to be honest with you, what he's going to do. He just comes out every now and again and just kind of says something in the media which kind of spooks the markets every now and again. So I'm pretty unsure. I'm a bit unsure on how the kind of regulation side of things is going to go. But the positive factor in all of this is when the regulation does come in, you're going to see bigger people like family offices and all these kind of bigger kind of corporates. They're just waiting for clarity at the moment, really. And I know it's kind of like it's a kind of broken tape almost, it sounds like, because that's all people have really said over the last 2 years. They're waiting for regulatory clarity. They're waiting for regulatory clarity, but they are, and like these people aren't like people like us who just like, have like a 6 figures to invest, or like 5-6 figures to invest. They're trying to invest billions and billions of dollars here into this asset class. So they need some sort of clarity. They need some sort of assurance. And until that comes, they aren't going to step foot into it.
But I think the positive in that to me is that gives the smaller retail investor the chance to front run these institutions, which is the opposite of what normally happens. And we could get into some of these promising projects like we touched on DeFi earlier on now at these depressed prices. And when that flood of money does eventually come, we'll be the big gainers.
Yeah, that's the great thing about the crypto market. It was built from the ground up by people like us. Usually when you have kind of products like this, asset classes like this, it's usually institutions that get their hands on it first. But we managed to get our hands on this first, which was the great thing about this. And to be honest with you, I wouldn't be surprised if people are like, institutions say one thing and then they do another, so I wouldn't be surprised if they are kind of accumulating at these depressed prices, like you said, just kind of really quietly. But yeah.
Yeah, and also, the market's kind of priced in these rate hikes, just to come back to them just for a sec.
Yeah, I think you're right.
Especially for, at least a hike at March, at least, they kind of already kind of priced in. These rate hikes, how many basis points should we be expecting? Is that 25, 50? Like where would you say we should be expecting in regards to rate hikes? Because they've got to be careful if they're going to hike 6 times, as they say, right? So what do you think we should be expecting for the first hike?
It's a tough one. In my opinion, I think they will stick with the 25 basis point hike. There's a lot of talk about 50, but I think the market's pricing in around 50-60% chance of a 50 basis point hike at the moment. I think they're going to do less because you've got kind of Fed Bullard at the moment, who he's like calling for like 100 basis point hike by summer, which is absolutely absurd in my opinion. But I think they have to be careful because they're really on a knife edge at the moment. They're trying to moderate inflation, and at the same time, they're trying to not break the economy. So I think they are treading on like hot coals at the moment, which I think is why they're going to go for a 25 basis point hike to start with. Don't forget they're ending QE as well at the same time. It's not just the interest rate hike; they're ending QE as well. So I think a 25 basis point hike to start with, and then they'll kind of take them. Remember, if the Fed are they're an organization who go solely off the data, and they're an organization who give plenty of forward guidance, as they say. They don't just do things without telling you about it, right? They'll subtly say things in the news. They'll put the Fed speakers out on CNBC and Bloomberg just to kind of as puppets, and to kind of to talk the narrative. So yeah, in my opinion, 25 basis points to start with, and if inflation doesn't moderate by Q2, Q3, they'll probably get a little bit more aggressive as time goes on. But I remember I came on your podcast last year and I said that inflation was transitory, the worst call in the history at that time, I remember. But I do expect inflation to moderate over the course of this year. And there's several indicators. If you look like, for example, at the global credit impulse, which for anybody who doesn't know, that's kind of like an indicator of telling you how much kind of money banks are lending out, really. And that's kind of really just kind of really bottomed out at the moment. Whenever that indicator tends to really lead global inflation by around 15 months. So that's now bottomed out. So we should see inflation by the end of this year more towards that kind of 5% kind of mark, I'd say. 5% mark.
I agree. I think that inflation's will slightly start to moderate, probably by the end of Q2 at least. I think we will start to see that. But yeah, there's a lot to sort of take into consideration, especially with the rate hikes. So you got they're in a bit of a tricky situation. They've obviously put themselves in it, but do they want to sacrifice the stock market at this stage? But then at the same time, do they want runaway inflation at the same time? They're kind of in a bit of a tricky situation.
That's another thing as well, because inflation is now the problem. Everyone talks about Powell's put. What's Powell's put? What is the strike price? How much does the equity market have to fall for the Fed to then step in? I think that's considerably larger now because of inflation. If, like I said, if inflation doesn't moderate, that Powell's strike price is going to be a lot lower. Usually, there's a chart which I came across on the S&P 500 ever since the March 2008 or 2009 lows or something like that. Any quarterly candle in the S&P 500 where we've seen a decline of around 20 to 25%, the Fed has stepped in and changed their policy approach. I think that's going to be just a slightly bit. The strike price of Powell is going to be slightly bigger now. I think it's going to be around about potentially 30% maybe, due to this inflation narrative. He's got to kind of give himself a bit of breathing room. He can't just step in if the equity market drops 15 to 20% and start QE and raise rates again, because he's not in a position to do so, you know?
Yeah,
so
I would be surprised. Like, it's going to be difficult because if they hike rates even slightly and stop QE, I'm going to be, it's going to be, well, what's going to happen, you know, like, but then what are they going to do? Start QE again? And then it's just a double-edged sword and a game of ping pong that they're playing with themselves.
I think there's a bigger picture here, isn't there? Because it's also midterm elections year. So I think the instruction from Biden to Powell is fight inflation in the interest of the common man, and to hell with the stock market if that hammers the rich. They've had it good since 2008. So I want to moderate my losses in the midterm elections. Therefore, please, go after the man in the street with lower food and gas prices.
Yeah, do you know what was interesting about that? Because Powell got renominated as Fed chairman at the beginning of November. The FOMC statement came out a couple of days later, as it does every month. And in that statement, as has been during the whole course of 2021, they put inflation is a problem, but it still remains transitory in our eyes. A couple of weeks later, he then sits in front of Congress and retires the word transitory straight after he got renominated as chairman by Biden. So I think you're spot on there, Graham. I think Biden had a meeting with him behind closed doors and said, you need to fight this inflation problem, because inflation isn't just a problem for the consumer. It's a problem for congressmen. It's a problem for senators around the United States as well, when it comes to these things like midterm elections. So yeah, you're absolutely spot on there.
Good. Well, I think it's also what brings people rioting on the streets, isn't it? If you look at what happened around the world recently, and even in Kazakhstan, you put prices up 50% overnight, you're going to get the pitchforks out on the streets. So, they probably were thinking about that as well. So, obviously, I'm not for one moment suggesting that the Federal Reserve isn't totally independent of the U.S. government, but I believe they probably have a little bit of a chat with each other now and then.
Oh yeah, I think they are politically inclined in a certain way. Yeah.
Well, look at the governor of the Bank of England saying, "Oh, by the way, we just raised interest rates, but please, don't ask for a pay rise. That's not really going to help us at all." I mean, what was he thinking?
Yeah, that was great. Another thing that he said, which is really, I mean, we talk about inflation, guys, but like really, it's really sad to see, because it's people's livelihoods kind of at stake here, and. But when he raised interest rates just a couple of weeks ago for the second time, he warned families, didn't he? He said, look, you're about to face the worst living conditions we've seen in a decade. And that's, as much as we sit here, like I love sifting through the data day to day, week to week, month to month, but it's not funny, because people are really, really suffering out there. And it's sad to see, but it's the climate we're in, and they've got no one else to blame but them. The central bankers have got no one else to blame but themselves.
Yeah.
Yeah, and I think it would actually be a healthy thing to see some decent pay rises. And I think it would actually help the economy in the longer term. So I think there's some battles to be had there. But yeah, I think it's going to be an interesting year at the macro level, as you say, Dilen.
Yeah, that's another thing as well. I think people are blinded by the fact that I think they're a bit more aware to it now, but maybe like a few months ago, when their wages were rising, they were blinded to it. They were getting rich because their wages were going up, but in reality, their purchasing power was going down. The value of their money was being eroded away, which they weren't aware of until inflation really went mainstream over the last kind of four months. Probably now it's been really mainstream, I'd say. So yeah, real wages are negative. That's the reality of the situation.
I would also love to see where we're at. Where real inflation's at. That'd be an interesting figure to put out there, wouldn't it? But
video, didn't you, the other day? I've not watched it yet, Dee, but I remember you posted a video of someone on YouTube calculating what the real kind of CPI is or something like that.
Oh, it was incredible.
Yeah, I did one where I went through the Office of National Statistics website and all of their December 21 figures, and although 4.8% was the official overall figure, when you look at the stuff we actually buy, the stuff we actually use, the average was more like 15 to 17%, with things like cars up 25%, fuel up 30%, you know. But so yeah, in real people living a normal life, inflation last year was more like 15 to 17%.
Crazy.
Yeah, I would say it's probably 10 on a normal year when they're 2%, you know, yeah. But yeah, you know, it's going to be a mystery for us normal people, right? So, but now look, Dilen, it was awesome to have you back on as always. You know, be interesting to see where we're at in a few months' time, have you back on and discuss what's going on. We didn't even sort of tackle employment and the wage inflation that was mentioned at the end, which, you know, we didn't. There's so much stuff that we could have covered, right? But we really appreciate you coming on, and yeah, look forward to speaking to you again and seeing where that goes. And if anyone listening, you know, wants to hear a little bit more about Dilen, you can follow him on Instagram. We'll put all the stuff in the show notes below and underneath in the comment section too. So is there anything you want to close on, Graham, before we wrap it up?
No, just to say, it's as Dilen touched on, there's never been a more important time to be aware of the big picture macroeconomics, and people like Dilen are the sort of people you should be following to get some of that information, because you can't be passive anymore. You've got to be really active in creating and protecting your wealth. So, you know, learn about the big picture, invest time in it, get information from people you trust, because we are living through unprecedented times, and it's going to be a very interesting ride the next few years.
We also forgot to ask the one question that we always ask everyone, Graham. So Dilen, we got one last question to ask you.
Oh, God, here we go.
You know what it is.
What is it?
Buying price prediction by the end of the year.
Oh, no, don't give me that, man. Oh, God. I don't know whether to bring the Bitcoin bull in me out or to be the back bear that I've been on this podcast. I'm going to say around about $30,000.
Wow. Okay.
Mr. Bear, Dilen the Bear.
saying that just due to like the whole growth kind of narrative that I was talking about, and growth potentially slowing down by the end of this year. And if we do have that knock-on effect on the equity market, then crypto could be in a bit of a worse position. But yeah, probably in this somewhere around this range that we've been sitting in right about now, I'd say. Yeah.
Okay. Well, as always, appreciate your time, Dilen, and we'll catch up soon.
Appreciate you guys.
Thanks,
Appreciate
Dilen. Cheers. Bye now.
Guys.